Hello, Free Money family! It's Sloan coming to you with another fabulous edition of the only podcast on the planet that combines institutional grade investing insight with actual gardening tips. On this episode, we're talking with cryptocurrency entrepreneur Martin Froehler about what's possible in the realm of decentralized finance. His company, Morpher, operates a 24/7 trading market that allows users to trade hundreds of stocks and cryptocurrencies with zero fees, infinite liquidity, and up to 10x leverage. That sounds pretty cool. So how does he do it? Well, listen on. We ask him whether he sees the traditional finance world converging with crypto, as popular apps like Robinhood already offer stocks, stonks, and coins in one interface. We also ask how he pulls off the unlimited liquidity thing, and dive into the all-important question, how does he make money? Then, as always, we take questions from listeners, talk about what's been going on in our various projects, and deliver our tried and tested gardening tips at the end of each episode. If you'd like to ask a question for a future episode, shoot us an email. You can reach out at freemoneypod@gmail.com with whatever's on your mind. You can refer a guest, suggest a topic, or just tell us you think the podcast is neato. That works too. That's about all for me until the other side of the disclaimer. Don't forget to leave us a review, share the podcast with a friend, and think about doing something nice for a stranger. Bye.
Ahoy, Free Money Podcast listeners! I'm Sharkbait Buckley, the Disclosure Pirate, and I'm here to set ye straight about what's going on with this here show. Sloan Ortel works for Invest Vegan LLC, a New York registered investment advisor. Ashby Monk works for Stanford University, Adapar, Future Proof, Long Game, and various startups. All opinions expressed by either Sloan or Ashby are entirely their own, and do not reflect the opinions of their crew or any company. Clients who invest vegan may maintain positions in securities and strategies discussed in this podcast. Advisory services are only offered to clients or prospective clients where Invest Vegan and its representatives are properly licensed or exempted, and a client agreement has been executed. Arr.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money, money, money.
Dollar.
Welcome to the Free Money Podcast, where we do it live all the time.
We do.
I
You
I
really
feel like on the
nailed
last
that
podcast-
intro, Sloan. You really just crushed it.
Thank you. So on the last podcast, later on in the segment, we always talk about what's been hard for us.
Yeah.
And you were like, I can't sleep. This podcast, I'm coming in with a record low sleep number.
Like zero? Is that number zero?
Like zero.
Oh
Like zero.
my goodness me.
Yeah.
Oh my
I got the
goodness
double
me.
vaxes.
Oh,
Flew in COVID at once,
man.
and boy, I don't need to sleep anymore. I'm like mostly nanobots.
Yeah, no, the nanobots do give you that little extra juice.
Yeah.
But that's too bad. How you feeling? We're doing this still, though, right?
We're doing this still. We're not.
We don't give up.
We would never give up on a podcast.
We will always look to free the money for you guys, even when we aren't sleeping. And this is an early show. This is the drive time show.
The drive time radio. Yeah. I will say, like, in my sleepless night, I was like, what would put me right to sleep? I'll go read a bunch of 2022 investment outlooks.
Oh my God. That's our next show, Sloan. That's our final show of the year. Stay tuned.
Stay tuned. Yeah, I mean, wow, we're actually doing a good job hyping the show.
I think we are, yeah. Like and subscribe.
Like, comment, share, subscribe. And I don't know, maybe we'll send you a picture of Sharkbait the pirate if you're really well behaved.
Can we get a signed autograph from Sharkbait? I think I would actually like to have that. Yeah, that might be hard. I think he disappeared into the Fiverr, the land of Fiverr.
Yeah, I'm sure he's somewhere out there on the blockchain.
I think that's right. I think there's NFTs you can purchase. I don't have a long ashbililoquy today.
Ashbililoquy?
I actually started thinking
well.
the off the top. I'm like, what should I call off the top? And I was like, ashbililoquy. Anyway, but we've just had the Pineapple Express here, which is what normal people used to call Atmospheric River. The Atmospheric River, for those of you that don't know, dumps half of the water on the west coast of the America that's where we get half our water, atmospheric rivers. Yeah. And so we used to call them Pineapple Express because it would take the storms would pick up all the moisture out over Hawaii, and they would come in and they would drop it on us.
Makes sense.
But I just wanted to just off the top, like we've just had this big thing. People are probably tweeting photos of like 10 feet of snow in Tahoe right now. That's what,
yeah. It seems absolutely nuts.
It's nuts.
Mean,
yeah,
total dump.
But I went and gazoogled it for a second, and these things deliver 10x the moisture as the Mississippi River. And they are 300 miles wide, and they are just beasts. And that's why thinking them of as a river is probably the appropriate thing, rather than Pineapple Express, which most people think of as marijuana.
I did think that you were like, oh yeah, we just, you haven't slept, Sloan. So you know what I did? I lit up first thing in the morning.
It is legal. It's legal tender here in California.
And here in New York. But, that language is super evocative for what that is, because I think one of the things we struggle with in climate change is that it's so abstract.
Yeah.
It's so like, oh, cool, temperature changing, but like when you have a one-off atmospheric event that can deliver 10x the rainfall of the Mississippi like that, I mean, I don't know if it's one-off or not. I've literally never heard of it. But if you have this big, kind of stream in the sky, that's powerful stuff.
Yeah, I mean, people in Florida will laugh at us, but we got 3 inches of rain. Thought that was a big deal in 24 hours. People in Florida are like, "Kim, man, we got 20."
Yep.
Our good friend Jason Voss literally said that to me when I mentioned that we're getting 3 inches of rain. He was like, "Oh, that sounds pretty serious. Let me tell you about our shit."
Oh yeah, that's like, yeah, I've literally caulked my car so that I could like float it to the general store, like in the Oregon Trail.
Which makes me picture that classic meme of the dude with the American flag outside in the rainstorm with the giant wind coming at him. If you can picture it in your head. Anyway,
America the Beautiful.
America the Beautiful.
America. There's nothing more beautiful than that. Just
like
a guy. Yep.
No, this is good news. I always think of it as like I have like quality news rather than good news, but I have interesting news. Okay, so a couple of bits of news, and this is the blockchain episode.
Yep, and one of many.
And we've got 2. Mm-hmm. And I have some blockchain related news, but I'm not going to start there. I'm going to start with the BlackRock, and the BlackRock
sounds like blockchain.
Yeah, it does. It was all designed, Sloan. BlackRock is announcing they are intending, I think they listened to the Free Money podcast because they're taking their proxy voting much more seriously now. Their activism.
Wow, good for them.
Yep. And they have 2 initiatives they're going to pursue aggressively. They've just announced. One is to push companies to have more diverse boards. So they're going to go and push companies. They say boards should aspire, which isn't the kind of language that invokes teeth, but they should aspire to be 30% diverse with at least 2 female directors. That I guess is a step in the right direction. It's definitely not.
I mean, like
full
I'm
diversity.
Picturing Andy Bahar rolling his eyes right now. And of course, was just on this podcast is the CEO of As You Sow, who, have been in that fight forever.
Yeah.
I mean, terrifying that would actually represent progress if most companies got to that level.
Well, look, BlackRock is coming out and saying boards should not be all white dudes. That's basically what BlackRock has announced to the world. So
instead,
kudos.
they should be 30% non-white dudes.
Exactly.
Which, the category diverse. I don't even know where to start.
Are we now giving them shit? Is that what we're doing? I think we're officially giving BlackRock shit for this.
I feel like trolling BlackRock is like one of my main qualifications.
I think they can handle it. I think they got thick skin over there. It's actually not thick skin. They just have a wall of money in front of them that blocks
exactly. From being the world's most humongous asset manager.
Anyway, so boards should not be white dudes, according to BlackRock, which is a true statement. You know what I mean? So that's good for them. And then they also, which I think is pretty cool, want companies to disclose their net zero aligned business plan. And so they're going to be pushing companies to do that, which I thought was a pretty interesting push too, because it's like we all see these net zero commitments, but we don't see a lot of like plans. So
Yep. Yeah, I mean, like, honestly, just that disclosure is quite meaningful. I mean, there are all these great initiatives that are out here with, like, carbon tracker and, TCFD and so on and so forth. I think TCFD will go into like really granular detail. Like, does the board have a point estimate for carbon in 2042 that they use in making their carbon plan? Like, do you have an internal price for carbon? Like,
Right.
actually, pretty granular questions.
Oh, that's good.
That like help you kind of tier out the commitments and move past the like, yeah, we're gonna do it. Don't worry about it.
Yeah, they're going to do it. Don't worry about it. That's what the
get to
pension
it.
funds are saying. We're going to get to net zero in 2050.
Yeah,
We got a beat on this.
yeah, we're gonna do a lot of things by 2050. By 2050, I'm gonna be jogging every morning. I'm gonna be sleeping every night.
I love we got a bead on that. What is a bead exactly? Anyway, sorry. I just
Sounds like it's from a cop movie in the 70s.
I got a bead on that. That's called... Okay, my next bit of news comes to us from the Australias. Retail Employees Superannuation Trust, which is one of the larger trusts in terms of membership. It's actually bigger, I believe, or second to Australian Super. And if you recall, this is the superannuation fund in Australia that was sued by the membership for not taking climate change seriously, which is the kind of event that pushes you to think creatively about how you invest. And that is being reflected in this bit of news, Sloan, where they are saying that they plan in 2022 to start investing in cryptocurrency. And that would make them the first superannuation fund to invest in the crypto asset class to date.
That's really, I think that kind of gets to a thesis that I associate with you, whether or not it is actually your thesis.
I love it. Let's hear my thesis.
My internalized Ashby voice says this, like this sort of notion that like ESG and crypto, though not necessarily the same, kind of fall into this innovation category.
Yeah.
Right. And if you start doing one, you start doing the other, you start doing all the other stuff. Right.
I feel like you know me, you see me, Sloan. You know what I mean?
Yep.
Like,
I mean,
let's just get some innovation happening. If we need to, if it's like, let's
at any cost.
Yeah, well, from crypto to carbon credits, that's not that far. You know what I mean?
Yeah.
Next bit of news comes from Mubadala. Say that correctly.
I'm still like not over that. That's how you pronounce it.
Yeah, I know. Until you like hear somebody real say it, everybody wants to say Mubadala.
Yeah, exactly. I feel like such an insider being like, it's actually Mubadala.
It's Mubadala. I think you'll find it's pronounced. The managing director of Mubadala, Khaldoon Al Mubarak. Now that one I don't know if I got right, but he is also announced that in 2022 he will be investing in the crypto asset class, and I quote, "I think it is real." So he thinks it's real. And he says this is a business that had 200 billion worth of value 2 years ago, and it's 2.5 trillion today. All these things aren't wrong. It is real, and those valuations are correct. And so, while many people are skeptics, he says, I do not fall into that category. Now, Mubadala, since it merged with IPIC and ADIC, the council, is one of the more kind of influential and big sovereign funds in the world today. And so now we're having superannuation funds in Australia, large sovereign wealth funds in the Middle East, basically saying, all right, it's time to get in. And in part, the reason I've selected all these stories is like, we probably need to like dig in and understand this space a lot better for the listeners.
I know, absolutely. I mean, like, I think that, for universal owners, for people who are, like, if you think about it, right, so many pension funds out there are just like, we own the market, right? And how do we define the market? We add up what everything is worth, and then
it's a good point.
We go from there, and like at a certain point, ignoring crypto becomes silly. I don't know if it's 2 trillion or 10 trillion or 50 trillion.
Well, it's also like, you probably own it already, because so many of the companies out there are dabbling. And like, if you're playing in venture capital, like undoubtedly you're like invested in the blockchain in some way, shape, or form, because all these new companies, they may not put it on their website, but they're using distributed ledgers and DAOs Yeah, that's not Buddhism. That is
Daos.
decentralized, autonomous organizations.
But yeah, like I mean, there's a huge difference between like there's like a company that like used to make Long Island iced tea that rebranded to being about the blockchain in 2017.
I'm in.
You know, like there's that category of like dabbling in blockchain, and then there are people who are actually building stuff. So let's talk to someone who's actually making a thing
Oh my
on
God.
the blockchain.
Is the guest here, or are we having a snafu?
The guest is here. Our technology is working flawlessly. I am the one who's not working flawlessly.
Martin Froehler.
Martin Froehler, founder of Morpher.
Hi, Ashby. How are you?
Good to see you, Martin.
Doing so well.
Welcome to the Free Money Podcast. We love having you on here. Can you hear us? Because we are notorious for having bad connectivity.
Okay. Okay.
Can you hear us?
I can hear you now.
Awesome.
Beautiful.
Awesome. All right.
We have lots of problems, but we also solve those problems quickly. So that's the good news.
Awesome.
Yeah, we're in the midst of like kind of creating our own native tokens so that we could do this a little bit more seamlessly. I think that you're a great person to talk to because for a lot of people who are new to DeFi, right, and new to crypto, probably more than a little bit confused by this whole thing. It seems like something that kind of operates completely independently from traditional trading and investing. But Morpher seems like from logging on and using it, you're aiming squarely at Robinhood, which also does both crypto and equity. So, maybe you could kind of start by outlining what you're doing, how you see it fitting into the space, and what's meaningful about it for you.
Yeah, sure. So you're right. We're aiming to become something like a global Robinhood. So Morpher is a platform that empowers its users to trade stocks, commodities, and cryptocurrencies, pretty much everything on the Ethereum blockchain via virtual swaps. And for the users, that has the big benefit that trading comes with zero fees and with infinite liquidity on all assets. So essentially, Morpher is a cryptocurrency protocol on the Ethereum blockchain that observes the prices of exchange-traded assets, such as the Apple stock or gold or Bitcoin, and creates virtual copies of these assets on the blockchain. And via our own native cryptocurrency, via the Morpher token, our users can place bets on the price development of these markets. Now, in practice, that means if you have 100 Morpher token and you bet them, say, on the Apple stock, they become 110 token if Apple goes up 10%, or they become 90 token if Apple goes down 10%. So we replicate the economics of trading the Apple stock, but denominate it in our own native cryptocurrency. The underlying stock itself is never actually traded, and that's what makes the Morpher protocol unique. So our users don't actually trade Apple when they bet Morpher token on Apple on the platform. They simply place an instruction into a smart contract, into a blockchain protocol. And the protocol accepts that bet, their instruction, no matter what. That means that the trade goes through, even if you're the only person in the world wanting to trade that particular stock at that point in time. There is no one who could stop you from doing it. And that's one of the big benefits.
Wow.
So you don't need someone on the other side. You don't even need a broker. You don't need an exchange. It's just you and the protocol. And the protocol is solvent by design, simply because it mints new token. It creates new token to settle the trade for you, or it burns token if your bet has not been successful or correct. So there is no counterparty anymore. And that means we open up the space of trading and investing for everyone and 24/7 and without having to charge any fees. So that's in a nutshell what Morpher is doing. And yes, that's right. So we're functionality-wise, we can be seen as something similar to a broker like Robinhood, so a discount or challenger broker, zero-fee broker, or more from a European perspective, like a CFD shop, a CFD vendor. So from the user perspective, it's pretty similar to that. The big advantage of Morpher, though, is, as mentioned already, there are really no fees, and there is no one standing between you as the trader or investor and the product that you want to trade or buy. So it's decentralized, it's trustless, and it is 100% transparent, and it is also available globally. So that's really our goal. We want to empower the 80% of the global population that currently does not enjoy access to Western financial markets. And I'm thinking of people in Latin America and in Africa, in some parts of Europe, and in most parts of Asia, who can only ever dream of owning or trading a Tesla stock.
This is amazing, Martin. So first of all, I heard you say virtual swaps, infinite liquidity, no counterpart. I mean, it's like you've invented the use case of blockchain and cryptocurrency that I think like all of us in the investment world was like, how are we ever going to use this, right? Like you've like crystallized it in a way that's pretty wild. I will come back to the free trading because Sloan and I have done a lot of talking about Robinhood not actually being free. But we'll come back to that in a couple of questions. My question for you is kind of like, just give us a history of you. Like, how the heck did you get to a point where like, you're like, here's what I'm going to do. I'm going to like try to almost replace the entire global option market with a token that I invented. Like, there's a lot to learn here. Like, who are you? How did you like figure out how to like write a Morpher token? And like, give us a bit of history here so we can kind of put you in context and this company in context.
Yeah, sure. So I've traded stocks since I've been in high school. So that has always been my passion. I've started trading US stocks at the age of 16, which was back then a very burdensome process. So in Austria, I had to use a bank. And they would charge me an arm and a leg for fees, commissions, essentially, to allow me to trade US stocks. And then they had access to only a very limited number of US stocks, so I could only choose from a very small universe. And that was, it was exciting back then, but it was also to some extent a frustrating experience. So trading and investing has always been a passion of mine. I've then studied mathematics in Austria, so technical mathematics. And joined a quantitative hedge fund after my graduation. I wrote a lot of quantitative trading algorithms, especially for futures markets, but also for US equities. I've later moved to Switzerland for the same fund and built up a quantitative research firm there from scratch, and trained and recruited a lot of novice quants from ETH and other great technical schools in Europe. And that was also the time when I had the idea for my first startup. So back then at Quantix, at Idealab, at the Switzerland company, we were a small company in Switzerland, not with a big name, and we had a lot of applicants who wanted to become quants back then. And even if I had been the best recruiter in the world, I would have to send away a lot of talented people who end up then working in different industries. So that's a clear inefficiency. Only very few people end up becoming quants or end up working at quantitative hedge funds. And many more are talented or able to write quantitative trading algorithms. So I wanted to build a company to solve that inefficiency and essentially empower everyone on the planet with free software and free market data to come up with quantitative trading algorithms in their spare time and connect the best trading algorithms, the best performing trading algorithms with capital from institutional investors. And in order to realize that idea, I moved to Silicon Valley with my family for 4 years and built my first startup there in the Bay Area.
Love it.
Which was a great, great experience. And all the time working at Quantix, the number one request of all our users was, can I trade my own trading algorithms on Quantix, on my previous company? And I always had to tell them, sorry, no, you can't. We can only work with institutional investors, with accredited investors. The minimum investment in futures trading algorithms has to be at least $1 million reasonably, simply because of high initial capital requirements that comes with futures trading, essentially. So that was the number one request and the number one pain point of everyone contributing algorithms for Quantix. They wanted to trade their own systems. And after letting that sink in, I realized that, yes, they face the same problems that I faced all the time when I was trading the markets myself. So trading and investing, it's really a suboptimal experience today. You don't get the level of access to the markets that you would like to get. So you only get what your broker deems you are worthy of trading, so to say. And there are many, many markets that come with steep initial capital requirements. Futures markets, for example. You really can only participate there if you have institutionally sized pockets. You can only trade when the exchanges are open, Monday to Friday, 9 to 5. And I'm like, really? In the 21st century, markets should be open 24/7 for everyone. You cannot easily short the markets on traditional equity markets, at least. You have to go through options or other constructs. You have to borrow the shares, and that is only possible if the broker lets you, and so on. You cannot leverage the markets. And on top of that, you always have to go through middlemen, and you have to pay a lot of fees to trade, and you have the risk that the middlemen that you put your trust into are defaulting on you. So to summarize it, trading and investing is really a suboptimal experience. And I thought, what would trading and investing look like in an ideal world? And in an ideal world, I would have access to all the markets globally, 24/7. I could trade without a counterparty, without depending on someone else. I could short every market. I could leverage every market. I could start with as little as $10 or trade as much as hundreds of millions with no difference, so to say, without creating slippage or suffering from slippage and market impact. And trading would be free. I would not have to pay to trade the markets. And that's in a nutshell the vision that Morpher wants to bring into the world. Fixing trading and investing for good, trading as it should be, essentially.
That's so cool. I mean, as a bit, when I was like thinking about what we wanted to ask you, I logged in and made an account, and started a 10x leverage position in Solana, which is one of the cryptos, right? And if you go to Morpher and you're, I guess it seems like I was trying to do it again in advance of this, and it seems like you've walled off American.
Yes. That's unfortunate, and we're working on that. So we really seriously hope to empower users from the US as well. It turns out that democratization and decentralization of financial systems is good everywhere in the world, with the notable exception of the United States and North Korea and a few others.
Yeah, we like it. We like it that way.
Look, just as a follow-up on that point, I think it's like what you're building is a incredibly powerful hedging tool for institutional investors. 24/7, infinite liquidity. Now, I still don't know if we've explained how the heck you do this, but you can imagine the option markets are the biggest markets on earth. And there's going to be a lot of losers if, you swoop in and you're like, now it's 24/7, it's free and it's infinite and there's no counterparty. The blockchain that you've built is the counterparty. You're going to disrupt the flow of capital. And so, America in particular will take a hard look at you before letting you into the system.
Yeah. You're going to piss off a lot of Chads in the process at various trading desks. I mean, because, to put on this kind of exposure all the time, you got to know your Chad, call up your local Chad at whatever trading desk and, convince them to make a market for you. One of the things that really interests me from reading the white paper is part of the way that you do all of this is that you collapse the complexity of trading and implementing and, all of this into delivery and, kind of destruction of these tokens, right? As that happens. But how do you actually make sure that those tokens correlate to the economic value that a position creates, right? And that there's a liquid and ready market for them.
That's a good question. So the one thing, it is correct. So that users within our ecosystem trade with infinite liquidity and with no fees. So while you're trading on Morpher, everything is perfect, so to say. But when you enter the system or when you exit the system, you need to either purchase token or sell token. And in order to do that, we still depend today, unfortunately, on two-sided exchanges or marketplaces for price discovery of the Morpher token. And they come with some kind of finite liquidity. However, a good step towards not infinite liquidity, but at least foreseeable and almost infinite liquidity are protocols like Uniswap with automated market makers, where you instantly can see in real time how much you could withdraw in terms of token and what you would get for that. So that this is, to some extent, it's guaranteed liquidity of the token. And in a decentralized way again. So this is not something that is again dominated by centralized players, but this is simply a liquidity pool against which you can exchange Morpher token anytime, any place, anywhere, so to say. Of course, it is our goal to constantly improve that liquidity pool in order to attract later on high net worth individuals, institutional investors as well, who might want to use Morpher as as you mentioned, as the perfect dark pool. But yes, so the higher the liquidity in such protocols, of course, the better it is. And this will come hand in hand with continued adoption of the protocol by more and more users globally. That will automatically increase the available liquidity for the token itself. And maybe the second aspect of your question, yes, a position on Morpher does not not necessarily translate one-on-one into a dollar position that would do something similar. So if you trade or invest in the Apple stock with Morpher token, it does not necessarily translate into the same gain that you would have had with dollars if you had traded the same in stock at Robinhood, simply because the price of one Morpher token versus the dollar is free floating. Morpher is its own currency. So the Morpher token may appreciate against the dollar or it may depreciate against the dollar. So it might not necessarily translate one-on-one into the dollar profit that you would have had otherwise. However, with that being said, the more mature the Morpher ecosystem becomes, so the more users we have in our ecosystem, the lower the volatility of the token versus traditional fiat currencies will become. So in the steady state, which is what we call the state of our economy in, say, 10 years from now, when we have onboarded hundreds of millions of users globally, the Morpher token will become more or less a stable coin at the end of the day. Until then, it will be volatile, but we are convinced, provided we have a product that finds adoption, that this volatility will be similar to any other cryptocurrency, so upwards pointing in terms of expected value. So it will have a positive Sharpe ratio. So it will be a source of additional alpha for our early users.
I mean, and also, I guess, important to point out that the competition, right? If you're a retail investor, is often buying some kind of exchange traded instrument like a levered ETF, which has obscene fracking error.
And fees.
So like, I mean, if you're looking at a 3x position, and you're going, oh well, I might have some basis risk in the Morpher, I'm curious because I run an asset management firm, and love to invest in obscure agricultural banks and other weird assets. I think when I go to think about how much liquidity for that I would be able to get, I have to do basically back of the envelope calculations on like what kind of volume there is and whatnot. Can you give us a sense of how that Uniswap liquidity range has evolved over time?
Yeah, at the moment it's in the still around hundreds of Ether, so it's not very big at the moment. We're a nascent ecosystem with Morpher, so to say, but it is our goal to increase that significantly in the next 1 to 2 years, and then even institutional size bets will find the liquidity that they need on Uniswap in order to get in and out of the token ecosystem. So we're working on that, we're preparing that, and the more adoption our system finds and the more users we have, the easier it's going to be for bigger users as well. Initially, our clear focus is on consumers. So the goal of Morpher is to empower people from countries where they simply don't have any ways or means of accessing financial markets, and especially US or European stocks, so the most efficient and best financial markets, to provide these people with access. So our focus initially is clearly on consumers, and only then, once we have a big enough ecosystem around consumers, we will focus more on institutional investors, family offices, high net worth individuals.
It's picking up, I'm just curious. So you mentioned Apple, and you mentioned giving access to US stocks. I know this is a bit off topic, but how many stocks can I trade today on Morpher, and is that changing over time? And is there any sort of constraint on the number of things I could trade in terms of different asset classes?
Yeah, so at the moment we support roughly 600 stocks, so pretty much everything that's in the S&P 500 and the Nasdaq 100. We have about 100 cryptocurrencies, the major forex pairs, cross rates. We have the first commodities with gold and silver. In principle, all we need to create a market and make it infinitely liquid for everyone is a data feed. So we can even turn things into markets that do not exist as tradable markets yet. Wow. So for example, we could offer real estate price indices by zip code in the US. So you could hedge against real estate prices increasing in your area if you're saving to purchase a house at some point. So we can literally turn anything that comes with data as a data feed. We can turn literally anything into a market. The only important constraints are it must not be arbitrageable. So the data stream needs to be fair. We need to have access to the data as early as it's released, and no one else must have access before us, because otherwise they could arbitrage it. And it must not be easy to manipulate the market. So this is one of the reasons why we are not listing small cap cryptocurrencies or penny stocks.
I would encourage you to investigate, this is going to sound dark, but mortality. The whole concept of like longevity for public pension plans that have defined benefit liabilities, insurance companies, like they're always trying to find ways to hedge their longevity risk. You know, if like we invent nanobots, which Sloan and I are convinced are already injected in our bodies.
This is a stringently anti-vax podcast.
No, just joking.
Just totally
dear
kidding.
Lord, somebody's gonna take that out of context, Sloan.
Yeah, just FYI, we're the worst people.
Dear God. But I forget what I was thinking of. Anyway, longevity. That is one of the hardest to hedge issues. People are out there buying life settlements, and they're like really trying to find ways to manage the longevity risk in these long duration plans. Do you feel like that's like an outcome, you know, it might not be next year, but when you hit that steady state maturity, like you're actually going to help us create hedging instruments for this stuff?
Definitely. I want to create every market for which there is demand on the planet. So, and that is not trivial to predict, not easily manipulable. So these are the constraints that we have. But if there is data, we can turn it into a market. Yeah? And if there is demand for it, we have a reason to do so.
So how do you make money?
That's a very good question because trading is really free on Morpher. So there are no fees for trading. We don't make any money from commissions or anything else. We also don't sell our order feeds to other parties. We do not depend on that. So the way we make money is comparable to how other crypto protocols make money or incentivize their miners in that case. So Bitcoin and Ethereum also function in a way that every block that's added to the chain creates new Ether or new Bitcoin, which are issued to the miner who successfully added the block to the chain, so-called coin-based transaction. So that's structural inflation rate, if you will, on Bitcoin or on Ethereum. That's becoming less and less over time. So Ethereum just recently had a very deflationary event. Their inflation rate went down a lot. And Bitcoin has its famous block halvings or block halvings of the block rewards every 4 years or so, where they also lower their inflation rate, and thus Bitcoin becomes valuable more and more over time. In our case, it's similar. We just issue a tiny amount of newly minted Morpher token every day for the company. And the company sells these newly issued and minted token into the market. The tiny amount is 0.015% of the total supply every day, which would compound to 5.6% of newly issued or minted token per year, which is nothing compared to the increase of M2 that the US just had. So we're actually way more deflationary than the United States dollar with our policy, and it's actually hard-coded in the smart contract, so it can never go above that. It can only become less over time.
So basically, I mean, like, I think from a corporate finance perspective, it's traditional to view your own stock as a currency that you can use to purchase things and do whatever. I mean, this seems like a kind of direct evolution of that concept, right?
Yep.
That's very, very cool. I mean, like, you know, I wonder, I mean, like, I guess, you know, naturally I want to trade, you know, the release of new Free Money podcast episodes, which is a totally non-manipulable thing. I know that you have a big institutional investment community that's clamoring, you know, to hedge that.
A lot of people asking. Yeah.
Yeah. Because a new episode of this podcast can have disastrous implications for a pension's overall risk tolerance.
Good to know.
He's like legit scared of.
Yeah,
what
you're
have I
like,
done?
what are we getting into here? I'm trying to make the regulators happy, not mad.
Mark, we promise that we will not make you look bad with the regulators or the institutional investment crowd or any other people. We are, in fact, decent, semi-reputable folk. We're very grateful to you for coming on the podcast.
Yeah, thanks a lot for having me.
Thanks, Martin.
That's been
Really
great fun.
appreciate it.
Send you a long
Awesome.
distance high five, and we'll look forward to catching up and hearing how it's going.
Sounds awesome. Yeah, thanks a lot. All the best in the meantime.
All right.
Bye.
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 Yeah, crypto, like, I think when he dropped the Uniswap liquidity thing, something big clicked for me. Because I don't know what that would correlate to in terms of the decile for liquidity of single name like U.S. equities, but like thousands of Ethereum per day, right? That's 1,000 times, call it 4,000, 5,000, whatever the heck it's at today. I mean, that is already like, for a nascent protocol, or you probably wouldn't like me characterizing it as nascent, a relatively young protocol.
Yeah.
You're as liquid as, most regional banks in the United States.
Interesting.
You
For me, the takeaway from that one is like Martin is like a super thoughtful, genius human being. And so like, it was really fun to hear him kind of explain this, but I'm also just like most of like, you start to get a little bit smarter on something and you realize just how little you know.
Yes.
And it's like, my goodness, for this whole community of institutional investors, like we're all going to have to get reprogrammed on like, what is like, we've all heard of smart contracts. We've obviously all heard of tokens and like, there's weird stuff happening out there in the NFT land. You can get a monkey, there's like monkeys for sale. You got to explain this to me.
And they're bored. They're really bored monkeys.
It's like, what is happening out there? And then you listen to Martin and you're like, oh, wait, like this world that is producing monkeys is also producing an infinitely liquid option and derivatives market that will help you, that will help you hedge mortality risk, which is like the hardest to hedge risk that pension funds face. And so, it's maybe a nascent protocol. I think he, at one point, I don't know if he's like past the millions of trades and it's growing quickly. And I think he's going to survive. I think they just had a big round of funding. And so they're kind of off to the races here. And if they ever get back into the US, it'll be really off to the races. It's just it was really fascinating for me to like hear him tell that story.
Oh, same. I mean, and like, I think the pain point too, like just from a talent into the markets perspective, there's really something to the idea that like the barriers to entry for creating your own sophisticated trading strategy are too damn high.
Yeah.
And like, I think it's been historically the case that like people who are interested in investing get cautioned away from taking active portfolio management approaches to stuff because the transaction costs are so significant. And so as a result, there are all kinds of people who just don't really develop that skill set.
Yeah.
And I don't think it's necessarily the case that like we should all be, figuring out new and interesting ways to speculate, but I'm sure there are people who would be really gifted at that, who, are sitting out unfulfilled, trying to figure out how to route calls through a contact center. Where they could be like, focusing on, all kinds of other cool stuff that would be really valuable to the community of folks that, are currently paying huge fees in the form of intermediated OTC trades.
Exactly.
With like all the worst people on the planet.
But the other thing to just like, he kind of mentioned it offhand, like no counterparty risk, like institutions spend a huge amount of effort trying to understand who the counterparty is. Will they pay? And like, we don't have to go back far. New Zealand Super Fund, I think they lost $200 million position because a counterparty failed I think it was in Portugal, failed to live up to, one of these swaps, or I actually don't know what the heck it was, but it was related to a derivative and a hedging instrument. And like they had operated in an environment where like they got it through a major investment bank, and it was, in the counterparty was a big regulated bank, and there was an insurance contract to actually protect it. And even with all that, like there was a bankruptcy, and then the Central Bank of Portugal chose not to, assign the liability from the bankrupt entity to the new entity. And so they lost it, hundreds of millions of dollars gone. Well, that's the kind of thing that freaks people out big time. And if you're now saying this coin is stable 10 years from now, so it's not like you have huge amounts of underlying volatility of the Morpher token, and then you're literally just like relying on an autonomous blockchain to either create or destroy Morpher token based on this, unarbitrageable index. That is like a pretty big step change in the world of managing risk.
Yep. I mean, yeah, and I would also note, on top of that, and like really directly springing from it, it recontextualizes the OTC option, right? Like, why do those get created in the first place? It's usually because whoever your counterparty is has a bunch of risk that they're trying to offload.
Yeah, about it.
Yeah, and then they call around, and then they're like, who can we, get to take on this, like, payer swaption or whatever. But this sort of, protocol, this sort of approach to this thing takes that mechanism of OTC deal making and makes it, puts the idea generation not in offloading risk at some intermediary, but instead it puts it on the client side with the person who, is actually really thinking about the long-term outcome of the pool of assets. Anyway.
What he's building is harder than what we're building.
I did the sound effect.
I heard the sound effect, but I was talking over it. Shit.
It's fine. Like, I mean, we did a great job there.
We did. No, you nailed it. It's the time where we talk about the things that are hard that we're trying to build, which don't even come close to writing blockchains that blow up option markets. But it could still be hard, Sloan. So what are you working on?
Yep. I mean, I would say, like, I'm totally just cribbing yours from the last episode. I'm working on getting to sleep.
Yeah. That's what happens when you've had zero sleep.
Zero sleep. Yeah. I think, like, it's, I have this from time to time when I'm excited about stuff. And like, I think it's just kind of part of my nature to be fueled a bit by adrenaline. And when like stuff, I've been reading this great book about, longtime listeners know that I think I'm always like, how do I not market this like firm I'm starting in a way that sucks and is lame? And I got recommended an awesome book on marketing. So I sort of went to bed with too many things to think about, I think.
I like this book, Play Bigger. Have you ever read that one? There's a little book tip.
No.
Yes, yeah.
Oh, man. I'm totally going to become one of those people who reads marketing books all the time now.
No, you can do this one on the Audible,
Play bit. The one I've been reading is called Obviously Awesome, which is about positioning.
Okay, I might check it out.
But yeah, I will check this out as well. I mean, what is hard for you this week?
I always find it hard to balance the like intense internal pressure to put out dumpster fires with the obvious need to focus on long-term stuff.
Yep.
And there's the thing about building new stuff is like there's always some fire that's burning. And so what I find is like a really interesting skill that you build as a founder of companies is like, which fires can I let burn without burning the house down? And still like put the foundations in place to build the big, the skyscraper that we all want to build. That to me is this like constant pressure. And maybe it's accentuated because I split my life between like commercial activities and academia. Like academia is like, you need to spend 4 hours thinking and writing. It's like really.
What, you want to put out the fire? That's our fire. We love that fire.
Yeah,
it's a tradition.
Wait, we can't track the invoices that we sent to that company, and like the money hasn't hit the account. It's like, I'll get to that. I need to go write a paper, and it's very hard to do that. Anyway, that's what I find.
I mean, that, like that sounds pretty tough. I mean, and, I think probably, for those out in the audience that are dealing with hard stuff of their own.
Smooth.
Masterful transition. Smooth. Audible sound effect. No big deal. This is Dear Ashby. This is the segment where we answer questions from listeners about what's on their minds. And it can be anything from, would you rather fight 100 duck-sized horses or one horse-sized duck. To what should I tell my CIO to get them to start thinking about innovation a little bit differently? Would you say that's an accurate characterization of the scope of questions that we've got?
I think they go pretty random sometimes. Yeah. So look, you ask it, I'll attempt to answer it. I don't do a lot of research. Not for these questions, at least.
yeah, exactly. Yeah, I will hip shoot.
I will hip shoot whatever you send me, basically.
I mean, and we get some good stuff. Like if you want to, if you have our emails, I hesitate to just put them on the internet, but freemoneypod@gmail.com if you don't, and that goes straight to us, and we will get you on one.
We also have a Twitter handle, which is my favorite.
Oh yeah, @freemoney42069.
As popularized by Time Man of the Year.
Oh God.
Oh shit! Is that too soon?
Sorry. I speaking of Elon Musk, and then we'll get to the segment. I've been like, why do I have this urge to rewatch The Fifth Element?
Interesting
right?
urge. Why do
Interesting
you?
urge.
You need to clue me in.
Well, so The Fifth Element is an epic, late 90s sci-fi movie, and Elon Musk, for that picture for Time Man of the Year, cut his own hair in a way that looks exactly like the villain from The Fifth Element.
It's true. Yeah, now that you say it.
Yep. And so I sort of was, I mean, damn him, he did it again. He played one of his social media mind tricks, and now I'm planning on watching The Fifth Element sometime in the next couple days.
I love that haircut. First of all, I almost wonder if I have that haircut. I was looking at myself in the video, and I was like,
"You're looking a little high and tight there."
Yeah, my wife still cuts my hair because of I don't know why, the COVID, I guess. It's just easy, frankly. She figured out how to cut hair, and now that's freaking easy. But it's like that hairdo, and then also Jack's beard, from Square. It's like these are the people that don't get candid advice from their inner circle,
or don't see, the initial, that's a little weird as a negative thing.
True. Although Jack does look like a wizard.
He looks like weird Rasputin.
Yeah, good one. Yeah, that's better than weird.
Yeah, he's kind of. I mean, I don't know. The Silicon Valley men, there's the 7 men of Silicon Valley. There's Mark and Elon and Jack and all those.
The folks. First name crowd.
Yeah, with the 4-letter first names. I mean, they've jumped the shark a long time ago.
What's our first question?
This is a great one.
Okay.
What can mentors and mentees do to increase their chances of success? Actual practical advice.
I do like that one. I remember reading that one. I even jotted some stuff down on this one. I think so. I've had coaches. So I was an athlete in college, rower. I've had bosses, and I've also had supervisors. So I've been those things: bosses, supervisors, and coaches. Back the other way. And in my experience, it's finding something to work on with your mentor or mentee. There's context really matters when you're giving advice about somebody's life, and there's nothing actually existing with that person for a little bit to get a better sense of what their strengths and weaknesses are. I also think if you're looking for a mentor or a coach or a supervisor, this is going to sound strange, but I would avoid those people who have natural gifts in that area that you're going after. In particular, coaches, people who are naturally gifted athletes generally just don't understand why you suck at the sport. But the people who just use deliberate practice to get up to the top level and are just making the varsity 8 or the, whatever, those are the people who end up the best coaches, because they truly dialed in the process of becoming excellent. Yeah, that's a
really provocative point. I've been an athlete a bunch too, and my sport is skiing. The other WASP sport, I guess we don't have tennis.
Rowing and skiing.
Exactly.
We're also starting a fencing league.
Oh yeah, that's right. That I mean, hey, that sport sounds cool as hell.
Swords.
Yeah, but like I mean, the best coaches, yeah, were all people like I mean, my best coach in high school blew up both of his ACLs and had to relearn how to ski from scratch.
Yeah.
You know, I like that's like a super real and very kind of pregnant observation for
Yeah, well, like
you know,
most of us aren't the Olympic gold medalists, right? Like
yeah.
we're gonna like just make that varsity boat, or maybe we're gonna be happy to make the JV. I don't know, like wherever you are in life, right? But it's about like moving from a position of like not being great to trying to be great. Well, like find those people that made that trajectory and partner with them. And it could be as a writer, it could be as a comedian. Like my gut tells me, like, is Seinfeld a great coach around comedians? I don't know. Like the dude's just too freaking good to like, and they started so young. But like, if you find somebody who's been like grinding on the road and is like, well, this is what you do with that crowd, and this is what you do with this crowd. And, when somebody says something like this is how you respond. Like they have just more of that ammunition because they sucked for longer.
Yep. Yeah. They can take like B materials and turn it into an A outcome.
Exactly. It's like this podcast. We sucked. People don't realize that like prior to the 41 episodes that you see on here, there's like, I don't know, 50 of just me and you. Like I went and I looked at the list the other day and I was like, oh, I think like we've basically put out now the ones where we started adding guests. But there was like so many where you and I just like had no format.
No format, no audio editing.
It was like just literally a phone call basically that we would put online and expect people to listen to.
And hey, that's how the process starts,
yeah.
right? Like sucking at something is kind of the first step of being good at something.
And I do appreciate that you did not put those sucky podcasts on our free money, pathway. Anyway.
Yeah. This question is like, a nuts and bolts investing-y question. How do you think about the disconnect between public and private valuations in tech companies? Why does it exist? I mean, this is particularly pronounced right now because there's a huge sell-off in tech companies in the market.
It's funny. This used to be the other
private.
It used to be the other way, right? There used to be something called a liquidity premium, and that like you would demand to like get a higher rate of return for the assets that you were buying in private markets, which is another way of saying the price would have to be lower, right? Because you couldn't get liquid fast enough. And it's almost like there's a liquidity I don't even know which. Now there's too many premiums and anyway, it's like
liquidity discount.
Yeah, exactly, liquidity discount. Thank you, Slow. And part of it I think has to do with like, and we looked a lot of this around the long-term stock exchange where we wanted companies to go public. Like companies are staying private because they can focus on the long term and like not get the hedge funds after them and all the stuff that kind of comes with being a public company today. And like public markets are much smaller than they were 25 years ago. We've gone from like 8,000 to 2,500, and like part of this reason is it kind of sucks to be a public company. Like it's great for your employees, they get more liquidity. It's great for your investors, they can get in and out. But ultimately, as like the management of one of these companies, you're now managing on a quarterly earnings basis. You're being criticized and second guessed, and like it's hard. And so this whole world does seem to have shifted into this private ecosystem, and all of the institutional investors have actually been pouring money into that ecosystem now. So it's not like, like if you really want to sell some of your shares in your private company, you can now. So it's like that incentive to actually go public is now going away. And so the whole thing feels like it's just moving into the private markets. And it's probably going to stay like that until we change some of the rules in public markets to like, I don't know, limit the, short selling, or who knows what the SEC is going to do. But I don't know if I answered your question, but that was
I feel like there's a kabuki dance that companies have to do in order to go public that they just don't when they're private. And and it's so wasteful. Like it's, basically the whole thing is you got to produce a 300-page document that says nothing and commits you to nothing. This last question is from me and Claire, gaming up for a very important venture. What is your Costco strategy?
Yeah. Clear eyes, full heart, can't lose. Is that? Sorry, that's that's like a class.
Go out there, give 110%.
Exactly. So the way that we think about it is like you don't want to take the children because you just hit 2x.
Oh,
you hit the 2x. Like whatever you're going to spend, you're now spending double. Remember to bring some bags because like for whatever reason they're like, hey, do you want some like random ass boxes? Costco does not do bags. Okay.
Yeah.
So bring your own bags, and then you're not like, doing Jenga in your car as you're like trying to fucking keep the different cans and jars. Also, one thing I say to myself as I was walking through there is things like, I don't need an industrial blender for my smoothie. I'm tempted because they do a very good job of like demonstrating the industrial blender's many capabilities.
Those Vitamixes are great. We have one.
Yeah. See,
we've been wandering in the woods without a strategy.
So here we go.
And like, yeah, I mean, I at one point went there by myself and was like, oh yeah, I'll try like a new Mexican salsa.
Oh yeah.
And now we have like 74 ounces of like this shelf stable guacamole sauce, like avocado sauce that.
Shelf stable. Interesting.
Yeah. It's a little
so that
sketchy.
goes to my next little bit of advice, which is like, you don't need 8 gallons of Listerine. And if you do buy 8 gallons of Listerine, you better like have a lot of storage space in your garage or something, which I don't have.
Yeah.
I don't have enough. Like, I don't have like an empty container for my storage safe guacamole and my, 9 jugs of Listerine.
I mean, like, if you don't have that, how are you saving for retirement?
It's a good point. Yeah, no, it's a good point. The other tip, which I know isn't relevant to you and Claire, but is wine. So if people are into that world of the vino, Costco wine is outstanding and cheap relative to what you would ever get at the Safeway or Whole Foods. So remember that.
I feel like, for the vegan non-drinker, Costco, the fact that Costco still provides value to us is a real testament. Because like most of what they have there, that's like, the big ticket things are like Wagyu beef.
Oh yeah.
Or like all kinds of other, really high end cheeses or, whatever.
That's true.
Kind of thing.
That's true.
But they also have olive tapenade.
They also, when I walk in, I'm just blasted with technology. It's like the newest TVs, and you're like, Jesus, that TV looks rad. Like,
it's like, what if instead of a wall here, I just had a screen?
Oh my God. And like the quality of the picture in the Costco, like you would get at home, it would never look that good. But for some reason in the Costco there, you're like, my God, that frog tongue. Because they've always got the best videos on there to demonstrate the quality.
Ashby's just like bringing his, picking up the Costco hot dog and like sitting in front of this, like, oh my God, where do they get this content?
Courtney and I, last Costco trip, no kids, we still stopped by the snack bar on the way out, and we got a bunch of pizza, some churros, and an endless beverage. I mean, the deal you get on the food at the Costco, that's the big tip coming out of here if you want free money.
Date night in the Monk household,
and you can get these pizzas to go. Like, you can be like, can I get 2 whole pizzas? And it's like, yeah, no problem. Pepperoni, bam, bam, bam. That's $9. It's like,
yeah, that's terrifying.
That's horse lips kind of activity.
Yeah.
Anyway.
I guess we're headed towards a close. What's your garden tip for?
I was perusing Better Home and Garden magazine, and I felt like I found a tip that speaks to me and you, which is this: Better Home and Garden, and it actually may be Better Homes and Gardens. So sorry about that.
I believe that's right. It's plural
for the people who are checking.
The multi-homeowner crowd.
Exactly. If you've got multiple homes and multiple gardens, this is your magazine. Don't clean up everything in your garden in the fall, which feels very freeing. Because first of all, there's a lot of beauty and different grasses and things like that growing up, but it has like also a nice effect on the soil. And as we know, garden tip number 2, bonus tip, it's the soil that matters the most, even more than fertilizer. in like the quality of your plants. And so these people who hire gardeners that clean absolutely everything the minute it hits the ground actually over time end up with worse soil.
Yep.
So in order to protect your soil, like let that stuff lay there and decompose a little bit and get into the ground.
Yeah, don't play the short-term game. You gotta
play long-term.
And if you keep it around, like that's habitat for insects too. That's a great tip.
And when people are like talking shit about how you haven't mowed your lawn or cleaned up your leaves, you could be like, Free Money Podcast. So I'm giving you ammunition.
Yeah, exactly. Be like, look, hey, I'm just harvesting alpha left and right here. You know, you don't understand. You're not innovative enough to grasp it.
Yeah.
Well,
it's nice to turn a tip into an insult pretty quickly.
Yeah, exactly. Like if anybody's sitting around in their lawn talking to their neighbors, make sure you heckle your neighbors.
Make sure you do, and make sure you are sitting in the lawn. That's tip number 3, because if you are gardening, you want to be out there a little bit and just be like, "What's up? What do you think?" You know what I mean? Get some feedback.
Yeah. What do you think about these plants, man?
Hey, what do you think?
I'm totally like that with my cotton plants. Like, have you seen this stuff? Have you seen a cotton pod? It's so cool.
Oh, good times.
But yeah, that about does it for us this week. It's nap time for Sloan.
And get some rest, Sloan, because we got our big year-end review this Friday.
Yep.
But to the listeners out there, thank you. We love you. Bye.
Love you. Bye.
I'm looking like money. Now make it rain on 'em.